Hello and welcome to the TechnoFunda video series. This is the first video for this series. Today we are going to talk about a fundamental process of TechnoFunda investing. To start with, we will understand how to get an edge over other market participants using TechnoFunda method. Now, if you think about it, there are three kinds of participants in the market. First, traders and speculators who basically come daily into the market, speculate using their intuition or their methods, mainly technicals, and then bet for the short term. It could be intraday, it could be even for very short period of time within minutes, or it could be a positional play for few days or weeks. Now, second category of participants are investors who basically take a medium to long term view. Again, this is subjective. Many of the investors who believe themselves as investor doesn't take a medium term bet, but they might be taking just a short term bet. But anyways, that is not the definition of investor as per us. And the third category of participants are more of arbitragers who basically just see short arbitrage within different securities and take a very small bet. All right, so now basically the idea is mostly the traders and speculators bet on technicals, while most of the investors use fundamentals for taking their decisions. So that gives rise to a question that whether if the market participants are using same kind of information, can they get an edge? Where is the alpha? So there is an interesting book known as Thinking in Bets, and that basically says that if you want to get an edge, you need to be smarter than other participants. So TechnoFunda is all about that. What we kind of do is basically blend technicals, which is more or less used by short-term traders but not used by investors, so thereby you get edge over other investors, and also blend fundamentals to it, which is not used by traders and speculators, thereby you get best of both worlds, and that is how you basically get odds in your favor, and that translates most of the times to outperformance in terms of returns, and many a times even lowering your overall risk at a portfolio level. To understand how this is done, we'll try to understand the process, because any investing should have a plan and a process in place, right? And how do we do it in TechnoFunda? So basically there are three stages which most of you would be aware about it. First, initiating a position or taking a buy call, what to buy. Second is what to add, or how much to average up or how much to average down. And then third decision point is basically cut or sell or trim or reduce your allocation, right? So the plan for TechnoFunda is like this. First, we try to get what to buy, right? And the starting point is difficult position for most of us. We don't know what to buy, how to start, where to start, which companies to research, and predominantly in fundamental research there is a problem. You run screens, you do a lot of reading of annual reports, and then randomly boil down to few companies, right? But again, that takes a lot of time. You need to do a lot of scuttlebutt, and again wait for the right time to buy. What we do in TechnoFunda is basically we use technicals as a proxy of all the information available with insider experienced investors and people who are actually doing the groundwork. It gives us an initial screen to start with, and then we can basically apply our fundamental analysis to take a buying position. Now the second point is where we decide to add something, right? When we think that okay, now the story or the thesis which we thought about is playing as expected, and if the valuation is still comfortable, why don't we add, right? And again here, this is the stage where you will find a lot of research report coming out of your company, a lot of news and interviews of the promoters coming out, and in technical terms the trend has begun and now continuing to emerge. So there fundamentally we don't know at what valuation to buy, but here again we blend it with technicals to see exact point in which we can basically average up, right? And there are various indicators which we use along with the fundamental analysis. Of course, we read research reports and try to get sense of what is happening in the company, but that goes hand in hand with the technical indicators. And the third step and the final step, which is very, very difficult for most of the investors. Buying is still very easy for most participants, but selling decision is a tough one. And particularly when your stock is going down, the loss aversion kicks in and the behavior of investor changes, and we don't usually like to book losses, right? Even if we know that the story is not playing out, there is something wrong with the company, but still that's the most difficult and tough point for any investor. So to avoid this, what we do is, again, we just don't live on hope. We have an objective way to exit. Again, we use some of the technical indicators to see if we should exit or at least trim some position, or at least it gives us the indication that this needs a serious study in terms of checking my own conviction whether whatever research I've done I'm right, or we need to still dig deeper and find the reasons why the indicators are telling us otherwise, because generally price doesn't lie, right? So we need to be very, very sure that if we are still holding on, we need a strong reason, a fundamental reason to hold that position. So this is how technicals blending in 3 stages of buying, adding, and then finally selling the stock helps us. And we'll discuss more about it in subsequent videos. Thank you for watching. You can connect me via Twitter. My Twitter handle is @mashrani Vivek. Until then, goodbye. Thanks for watching.